And as we take a look at that market action, Viv Govender from Rand Swiss Offshore joins us for that. Viv, an absolute pleasure and a happy Monday to you.
Well, you too.
It is a brand new week, Viv, but I would say a little bit muted on the corporate action front. I'm keen to get your thoughts on what markets might be contending with this afternoon.
We had a couple of elections last week. The UK election, as expected, Labour won, but they won, strangely enough, the biggest majority with less votes than they got in the last two elections. It was more a case of the Conservatives losing than Labour winning, but they have a very strong majority and so are able to actually push through pretty much anything they want to. In France, we had a surprise election win for the left. This comes after, Macron called a very, very rapid election after his party basically lost in the European elections, the European Union elections, and the right-wing, Front National, basically came, third effectively behind the left and behind Macron, his party, which came second. This, I think, is the surprise, considering the fact they individually. Just in terms of votes, the right-wing party got the most votes of any party, significantly more. But what happened was Macron and the left-wing party, basically, the left-wing grouping or coalition, agreed to not run against each other, and that consolidated the votes, and that's allowed them to basically get this, this win against the right-wing. I think temporarily the market is positive, but the problem is that some of the right-wing policies, some of the left-wing policies are rather, optimistic in terms of what they want to do. They want to lower the retirement age, I think down to 60. Macron's biggest things was to increase the retirement age to 65. They want to basically increase, public sector housing. They want to do a bunch of different things in terms of spending, and they want to do that based on taxing the wealthy. Macron has tried that in the past, and what happened was the wealthy left. Famous actors like Gerard Depardieu left the country. The richest man in Europe has gone to Belgium, and he's French, Bernardo. And we are seeing, I think, a situation in the EU where effectively the EU is very easy for you to move from France to Belgium, from France to Germany, or wherever you want to do within the EU, and because it's one effective pool of labor, which also means that you can shop around for taxes if you've got the money. So I think this is going to be quite difficult when they push through, and that might, in the longer term, be a negative not just for the euro because of the issues in France's budget deficit, but probably for the CAC as well, because of if you can't tax the people, you might have to tax the companies.
Very interesting. We will be watching that one very closely. Of course, we're another place where we're seeing election themes kind of emerging is with the US. Lots of pressure for President Biden to not run for the Democrats. I'm wondering if markets are reacting at all to that prospect.
It's amazing. If you watched that debate they had 2 weeks ago, you'd have been amazed that he hasn't really been. He's been gone down a little bit in support, but not a lot. It's because people are not voting for Biden, and people are not voting for Trump. People are voting against Trump, and people are voting against Biden. That is pretty much what the US looks like at the moment. You know what I mean? So Biden being negatively on the debate doesn't make people vote for Biden. It makes people vote for Trump to vote against Biden. You know what I mean? Oh, wow. You know what I mean?
Yes.
It doesn't make people reflective in terms of what they vote for. It's what they're voting against. And I think that right now it does look like Donald Trump is probably going to win. I think it's like a 2-to-1 odds. But remember, it was 2-to-1 against him, against Hillary Clinton, and he won against Clinton. So there's still a chance that Biden could win. There's also a very strong move to get Kamala Harris in the race to replace Biden. She's not as popular as Biden used to be, but at the moment she does seem to be a better candidate because she can actually function in the job. What is pretty clear at the moment that Biden probably can't. The effect on the market, I think, would be quite muted because I don't think that we are expecting to see too many dramatic things. Not like the French election where there's going to be significant economic impacts coming through. I think with the US, it's more a case of culture war kind of stuff as opposed to market-related things.
Staying with the US, so we are also starting to see Q2 earnings starting to emerge. Viv, I'm wondering that as an economic indicator. I know this week we'll see some of the big banks, JP Morgan, Chase, Wells Fargo, and Citi out. Of course, I'm just keen to get your thoughts here, considering also where we are in the interest rate cycle.
Yeah, look, I mean, I think yes, earnings are going to be important, but I think the more important thing is we see a bit of a turn coming against some of these AI companies at the moment. We had some reports from some, moves out there in terms of the analyst sector talking about whether or not the amount of money being planned to be spent on this. I mean, we're talking about people don't understand just how much money is being spent on AI at the moment. AI research basically is in the US more than all other basic research combined. Microsoft is spending more than the US spent to go to the moon on AI. Interest is inflation adjusted, so it's a huge amount of money. We're talking hundreds of billions between Microsoft and all the other big tech companies over the next couple of years on AI infrastructure. And the question is whether this is going to be the real kind of boon that people are talking about or hoping for. The reason I say this is more important than even to certain sector earnings is because much of the gains of the last year have been through these AI stocks. It has not been through overall market stocks. If you look at the equal weighted S&P 500, it has barely moved, whereas the S&P has hit new highs. Driven by things like Nvidia, etc. So I think that's more important. But in terms of earnings, I do think yes, the market's going to be looking at especially these magnificent seven companies and whether or not they started to get some revenue coming through in terms of some of these AI initiatives they've implemented.
I actually want to get your thoughts on that, Viv. You say the S&P 500 has actually barely moved if you strip out the impact of some of those AI stocks. What is it about that market? It normally is one that sees great volumes and even great optimism, even in the face of difficult macros.
Well, I mean, first of all, if you look at where we were last year, you would have seen that the expectations for this year were at least 3 rate cuts. We haven't no charts of 3 rate cuts. 2 is like the best we can hope for this year at the moment. In terms of the market, normally when that happens, we have such big disappointment rate cuts. You expect the overall market to come down. At the same time, we've also seen the U.S. economy start to slow down. Some jobs numbers coming out showing a bit of weakness at the moment, and those factors normally would have been associated with a sluggish stock market, at least even a negative stock market, especially when you consider the fact that disappointment coming through with interest rates. But the market's hitting new highs, and this has been driven by the optimism around AI. It reminds me of what happened in 1999, 2000, with the dot-com bust or dot-com boom, how you want to call it. It was a real technology. I mean, Apple, Google, Microsoft, etc., all have benefited from the AI. It was Google, Facebook, Meta, and Alphabet, how you want to call it, are basically AI companies. It's called internet companies. Sorry, AI internet companies. So the internet was real. Amazon, however, fell 90% when the dot-com bust happened, even though from that peak till now, it's up like 25, 30 times, basically. So even if the technology is real, sometimes the hype overtakes things at the start, and that could be a fear we're seeing at the moment.
Very interesting indeed. Also similar, then come back to some hard commodities. Looking at the price of Brent, we saw it peaking up to $87-ish last week. It's now down to 85. I'm just keen to get your thoughts on this one as well, if it is an indicator of global economic growth or even just global market sentiment.
I think also to do with some ease. I mean, last week we were talking a lot about Israel attacking Hezbollah in Lebanon and maybe explaining the war. Now we're talking about more maybe talks in Gaza that might be calming things down a bit. I do think that in terms of the Middle East at the moment, I think it's a big driver for obviously what's happening with regards to oil. At the same time, economic growth globally does seem a little sluggish, or at least slowing down a little bit. We're seeing inflation coming down in the EU, even the US. That normally does indicate that growth is or demand is coming down a little bit.
Well, Viv, I want to get into your stock pick in a bit, but first, maybe let's look at counters that have found favor with your industry peers.
Has to be accurate, right?
Yeah.
So I mean, I really like the company from as a beneficiary of South African growth going forward, and probably an early beneficiary of South African growth going forward. I like the fact that they're quite diverse. So they've got their traditional construction materials business. They now have the Lafarge cement story, and then some iron ore exposure as well, some base metal exposure as well that reduces cyclicality in that business. It's very well run. The team is so solid in terms of bedding down acquisitions, and it doesn't look expensive. It's still trading on a forward P of below 10 times.
I started on Wednesday on Nvidia. I wrote an article in Business Day this morning on Nvidia. Why I chose it, I think that I say to people, it's a superb business, and it's really it's really guiding the tech markets up. The whole AI story, it's not going to end soon. It will end. These stories always end, but for the meantime, you can just go with it. And if Nvidia falls, everything else falls. Now, I don't believe that's going to happen. So I'm saying just enjoy the ride.
All right, keen to get your thoughts on some of those. Viv, we've got Nvidia as well as Afrimat.
Yeah, I think Nvidia, it's been the biggest winner of the AI boom. It's basically the only company that's guaranteed to have made money off the AI boom so far. Microsoft, Alphabet, etc., are spending money on AI, but they haven't really made a profitable business model. NVIDIA, however, does make have a profitable business, an extremely profitable business. Earnings have been really good, and I think that if you are believing in AI, NVIDIA, ASML, TSMC are the three names you probably have to have in your thing. Maybe even AMD as well in there.
And which counter are you having this afternoon, Viv?
I'll pick one of these. The companies that do make these chips or make the machines to make the chips. And the one I look at is ASML. They are based in the Netherlands. They basically make the chips, the machines that make the chips. And what we're seeing recently with tensions rising in Taiwan and other places is that people want to have these chips made locally. There's a lot of belief around AI, and you want to have access to the chips. It's a very key part of it. And so what's going to happen is more places are going to make the chips. And even though the cost may go up because obviously, less centralization increases costs, but the one person that's going to benefit is the people that actually make the machines that make the chips, and that's ASML.
Brilliant. An absolute pleasure having you this afternoon, Viv, and getting the week going for us. That was your midday markets update with Viv Govender from Rand Swiss Offshore.